Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Tuesday, April 2nd, and you're tuned into On Trend, the show designed to keep you on the right side of the trend. So today we're going to look at the industrial sector, which is definitely on the right side of the trend with a breakout, and we'll look at several key stocks. We've got consumer discretionary making a move, and we're going to also look at housing and retail. I'm going to show you how to scan for new highs to find the strong stocks within the strong sectors. And then we're going to look at the emerging market ETF as it goes for a breakout. And we'll finish with some stocks to watch. So just a reminder that next week I start a 2-week vacation, but I have prepared 4 videos for you. The first two, April 9th and 11th, will cover RSI for trend following and momentum strategies. A lot of information there. And then the next two, the first one on April 16th, finding, tracking, and analyzing growth stocks, and April 18th, how to get a weight of the evidence approach using breadth indicators. All right, so we're going to start off with the industrial sector today because it was the biggest mover yesterday on Monday. And I highlighted the industrial sector on Thursday in On Trend as well as a few stocks. And we can see here, this is the chart for XLI. And it got a breakout on Friday, and then it followed through with a big move on Monday. So basically what's happening is you can see there's the highs from November and December, and you had a breakout above those highs and above the 200-day, and then this area turned into support. And most importantly is it held there. So you have the big surge, this triangle consolidation, and that breakout signals a continuation higher. And now, of course, we can use those lows. We can call it 72, and that is very bullish as long as we hold support there at 72. And you can see RSI holding that 40 to 50 zone and then turning back up the last few days. Now, perhaps even more importantly is RGI, the equal weight industrial sector ETF, is breaking above its February high there. So it is showing some strength. That tells us that we got strength throughout the sector. It's not just focused on the large caps, which of course dominate XLI. So again, you've got the big surge, the triangle-like pennant consolidation, and the breakout to signal a continuation higher. Now you can always dig down within the sector, and the two industry groups that I've picked out here would be aerospace and defense and transports, because most transport stocks are also in the industrial sector. That includes airlines and rails were making a big move today. So if we look at ITA, the aerospace and defense ETF, like everything else, we got the surge in January, and we got the break above the 200-day in February, and we corrected to alleviate the overbought conditions. It's not the best wedge in the world, but it's a corrective move back to the 200-day. And you can see with this surge we had over the last 3 days, we're breaking out here. And that looks like a continuation higher. And that would suggest we're going to take out those September highs. Now, I really don't like the transport sector as a trading vehicle because it's a real mishmash of airlines, trucking companies, railroads, and then you have FedEx and UPS, of course, the big freight forwarders. And if you look at this chart, it's similar to the ones we're looking at here. The only difference is look at these highs here. We have yet to take out those highs, so it's underperforming. But you can see we still got the big move up, the consolidation, and the breakout out of that consolidation, which is bullish. Now let's look at some of the stocks within the industrials sector. We have United Technologies up 3.34% and clearly one of the big leaders. That's a big defense industrial concern there. And it has taken out those November highs with the move today or yesterday on Monday. So that is a very good move. A break above the 200-day, consolidation around the 200-day, and a continuation higher. And look at RSI. We got RSI moving above 70 to show strong buying pressure. But, you know, you're extended when you're above 70. And so it comes back and it tests that 50 level, and that 40 to 50 zone is kind of support, and it is held with this bounce that we got. Next up is Boeing, which of course was all over the news with the issues with the 737. But if you look at Boeing on a longer term perspective, you had a lot of resistance in this zone around, say, 360, 370 with a number of peaks there. I'll just alleviate that one or ignore that one for now. But there's a resistance zone there. There's a gap, and you came back to it and firmed a little bit and now moving back higher. Look at Union Pacific, which is a railroad that is making a big move. You can see that falling flag consolidation. And what you had was the breakaway gap, which of course is a bullish indication. And you followed through after that gap to new highs, a falling flag correction, and a flag breakout for one of the leading railroad stocks. Next up is 3M, Minnesota Mining and Manufacturing was the old name there. And again, you can see a big move up, hitting resistance there with a triangle consolidation, but breaking out of that triangle with a big move on Monday. And then we have Honeywell, which is one of the leaders, just like Union Pacific. It is hitting a 52-week high in March, or that was in April 1st yesterday. So this is one of the leaders. United Parcel Service, I mentioned, there's that triangle consolidation and the breakout. And then we have Caterpillar, which is getting a big move. You know, it's been a choppy advance, but this little wedge here has clearly been broken to the upside and signals a continuation of this choppy advance. And that was a really strong close on Monday. And then we look at Emerson Electric, a big surge, a flat consolidation, flat flag, and a breakout with a gap. So a lot of stuff happening in the industrial sector. Now the other area that caught my attention was consumer discretionary. And this sector, of course, consists of home construction and retail. And we're going to start off with those. And if we look at ITB, we can see that there was some resistance there in November from these highs, and we got a higher high there and then continued up to the 200-day and then fell back. And we were still below the 200-day, and I thought we were failing at that 61.8% retracement, but you always got to keep an open mind because what you think is happening may not be what is really happening on that chart. It is a bit subjective, but what we have here is a big surge, and then that looks like a bull flag, and we broke out of that flag and we're holding above the breakout. And I would suggest that as long as that 200-day holds on a closing basis, this little flag breakout is bullish for home construction. And there you can see it holding that 40 to 50 zone for RSI and turning back up. Next up is retail, and it kind of looks similar because it's not as strong as some of the other groups out there for the simple fact that it's below its falling 200-day moving average. So it's not one of the best groups out there as far as leadership. Still, the technology groups are all stronger. Software, internet, cloud computing, cybersecurity, networking. Now, if we look at retail here, there it looked like it was failing at the falling 200-day and the 61.8% retracement. But we did have this surge here, a bit of a falling wedge, and we've got the wedge breakout. So as long as that breakout holds, I think the cup is back to half full for retail, and that helps the consumer discretionary sector. Now the thing with XLY is, of course, it is dominated by Amazon, which is like 24% of the ETF. So it's not a true reflection of the consumer discretionary sector as a whole, but clearly it's very strong here because you can see that it is breaking above these highs, and it is very close to a 52-week high from back in September. And then if we look at the equal weight consumer discretionary sector, there you can see that it has broken above these February highs, and it is very close to a 52-week high. And that is a very positive for the market because this is the most economically sensitive sector, and it is very close to a new high. This is the equal weight version, keep in mind. So as long as that 200-day holds at 100, this sector clearly is in a strong uptrend. And there you can see RSI holding that 40 to 50 zone on the pullback in March. So I want to look at high-low percent and new highs and show you how to scan for new highs in a sector. And the reason I'm doing that is because we do keep the high-low percent indicators for the sectors, but they aren't updated until after the close, an hour, 2 hours after the close. And if you want to see new highs in real time, you can do that by using our scan engine. So first of all, I've got a chart list here, and it shows the high-low percent indicators, and that is my chart list here. You can see all of these high-low percent indicators. And this is for the close on Friday, because I'm recording this Monday after the close here. So we can see here that if we sort this by clicking the close there, we can see the highest high-low percent indicators, or the sectors with the most new highs, and that would be real estate, consumer staples, and look who's in third place, consumer discretionary. And then look at third and fourth place, technology and industrials. So it is really good for the market to see these three sectors up there in the top 5. And I would imagine that's going to improve even more after today's action. But we're going to take a peek at that with the scans. Now you can see finance, yeah, it made a big move over the last few days, but you know what? It's not a leader. All right, it doesn't have that many new highs. It's still well below that March high. It doesn't have a breakout. It's not near a 52-week high. So I wouldn't get all excited about finance right now, because there are other charts out there that simply look better. All right, so this chart here shows high-low percent for the S&P 500 and 6 sectors. And the reason I picked these 6 is because they are the 6 biggest, and they account for 78% of the S&P 500's market cap. But the thing about high-low percent and the other breadth indicators is they treat all stocks equally. So a new high in the largest stocks, or largest stock, counts the same as a new high in the smallest stock. So you get an idea of how the sector as a whole is performing. And I like to do this to find out where the leaders are coming from within which sectors. And if we look at this, we can see that technology is doing fine, because we've got high-low percent moving above that plus 10% threshold in March a couple times. Healthcare is doing okay. Finance is not, because it cannot get above that 10% threshold. Industrials are doing okay, not getting far above 10%, but I'm going to scan for industrials coming up here. Then we go down and we look at the last two. We got communication services. It's not doing so great, but look at consumer discretionary. Had a nice big move on Friday, and we will check on how it's performing today as far as new highs are concerned. But it got up to 12.5%. So that tells you that more than 10% of the stocks in that sector hit new highs, and that is positive. Now we get to the 5 smaller sectors. Consumer staples, and it is doing just fine. Lots of new highs there in the latter part of March. Energy, nothing going on here. It is the weakest sector in the market right now. Utilities getting lots of new highs. REITs getting lots of new highs. And materials doing all right in mid-March. Not so great in late March, but still more new highs than new lows, and getting above that plus 10% threshold and showing good strength overall. Now, as far as scanning, it's really easy to scan for new highs. First, you need to pick your group, and I have picked the S&P 500. You could also pick the S&P 400 or S&P Small Cap 600. You see I've got forward slashes in front of that phrase there, and that means anything to the right of the forward slashes is ignored. So the only thing I'm scanning here is the S&P 500, the group is. Then I want to single out a sector, and I've added the group is and group is industrial sector. And you can see I can also change that to cyclicals, which is consumer discretionary, or technology. And then for a new high, I've got today's high is greater than yesterday's high, but the max of yesterday's high for the last 255 days. So you take the 255-day high from the previous day, and you see if today's high is above it. And 255 days is about a year, a little more, I put a few extra days just to have a little bit of a buffer. Now, where can you find the sector names when you're running a scan? Well, if you scroll down, you can see you can choose sectors and industries. So there I click, and I could do communication services sector if I wanted to. So once you're finished, you can click check syntax to make sure your scan code is correct, and it is. I wouldn't worry about this little triangle here. It says a mismatch, but but the syntax checks out all right, so I can click Run Scan and see the results. So if we look at the results of the industrials companies that hit 52-week highs, and this will be for Monday's price action on Monday's close. It's after the close right now. But what I can do is I can remove the columns that I don't want. So I probably don't need exchange. I don't need universe. And I'll go ahead and keep close and volume. And there you can see your sector is there. So we have 13 stocks hitting 52-week highs within this sector. We've got CSX, which is also a railroad, Norfolk Southern, which is a railroad, and we have Republic Services and Waste Management, which are both into the waste management industry or sector, and Honeywell and Fastenal hitting new highs. Now, how many stocks are in the industrial sector? Well, to find out that, we have to go back and adjust our scan. So I'm back on the scan, and all I want to know is the group is the S&P 500, which stocks are in the industrial sector, and I can just calculate that total. So I click Run Scan, and there you can see we have 70. So we had 13 new highs out of 70, and that is 18.5%. And that shows a nice big chunk of industrials of the sector hitting new highs, and that is positive. And we're going to take a short pause, 30 seconds, and we'll be right back after a word from our sponsor.
Join us April 1st to April 5th to celebrate our 20th anniversary here at StockCharts.com with special guests Arthur Hill, Greg Morris, Gaddis Rose, Martin Pring, and John Murphy. Tune in to Market Watchers Live at 12 p.m. Eastern Standard Time during the week of April 1st to April 5th to help us celebrate.
So we got a big move in China with a 1.6% advance in the FXI, which is the China iShares ETF, and it looks like it's poised to follow through on the breakout that we had in February, which was duly noted in our charts. And if we look at the overall structure of this trend or this chart, basically we can see a big advance, 2016, 2017, pretty much a one-year correction in 2018, and you retraced around 50 to 62% of that prior advance, which is pretty normal for a correction. So basically you have two steps up and one step, a little more than one step back. So we firmed in here in this 38 area and then got the breakout there in February. Now, after the breakout, we had a run from, say, 38 to 46, we'll call it, and that's a pretty sizable advance, and it needed to digest these gains. And you can see it's done that with what looks to be like an ascending triangle of sorts, because you kind of have a higher low there, relatively equal highs, and if you get a breakout, that's going to signal a continuation higher. But I think the bigger picture is clearly turning up because this channel wedge breakout is what's really dominant right there, and it signals a continuation of this prior advance. So we're above that 40-week, which is just turning up, and that's also bullish. When we look at RSI, we can see RSI move back above 40 in January and continues to hold, back above 50 and continues to hold above 50. So until RSI moves below 50 and this ETF moves below, I would watch that low from March. If we go, say, below 41 on the chart and 50 on RSI, that would be the negative for FXI here. So let's face it, China is important for a number of reasons. It's a big economy, and if we can get things sorted with China, that would be a boost for basically the global economy, blah, blah, blah. But also because if you look at EEM, the emerging market iShares, China is the biggest country represented in that ETF. And the way you can find that out is you can just do Google EEM holdings, and there you can see some results at the top. But I think you have to go to the Fund Family website, and that would be iShares. Go directly to the source to find out these holdings, because you get the most up-to-date weightings, and then you get other information about the ETF if you so desire. So if we go to portfolio, there we can see the individual stocks in the portfolio, and there are the country breakdowns there. So China, 32.85%, Korea, 13%, Taiwan, very tied to or close to China, 11%, India, 9%, Brazil, 7%, and so on. So clearly a big move up in China is helping EEM and Chinese stocks. Now, when we look at EEM, we can see a similar pattern as what we saw with the China iShares, FXI. And there we have a big advance in 2016 and 17, a decline in 2018. But it's like 2 steps forward, 1 step back, maybe 1.5 steps. And I can go to a live annotation just so we can measure that. So what I'm going to do is I'm going to select the Fibonacci retracements, and I'm going to draw it from this low here all the way to that high, and I can extend it over, and you can see it's a 50 to 61.8% retracement. Now, there's no magic in Fibonacci numbers. I know some people would disagree with me, but it's, it's just a basic premise of a trend, and that's the way Charles Dow described it. You move 2 steps up, and typically you have a retracement of 1/3 to 2/3, with 50% being the base case. And so here we are, we have this retracement, we have a breakout, we're above the 40-week, which is starting to flatten out, and it looks like, we've had a consolidation above the 40-week, and now we're breaking above that consolidation with that move today. So as long as we hold above 41 and above 50 in RSI there, I think that is going to be positive for EEM. So I was going through some of the other emerging market related ETFs, and I came across the Vietnam ETF. Symbol is VNM. It's from Van Eck if you want to see the holdings. But basically we had a big move and breakout there in 2017. Then we came all the way back to the breakout zone in 2018. Firmed twice, so we got a double bottom working there with those 2 lows. And then we got the breakout with a big move in February and above the 40-week moving average there. And we since consolidated, had a couple of sharp declines, but it's still a consolidation with a slightly rising low, so it's a ascending triangle of some sorts. You can see more detail if you look at the daily chart there. But as a bullish continuation pattern, a breakout here would be bullish and signal a continuation of that trend, uptrend, because this big move up and the breakout sets the uptrend and the bullish bias, and that sets the bias for the pattern, so we expect an upside breakout there. We also got some big moves in semiconductors. So we'll start off with the stocks here. And the important thing to remember here is these are continuation moves. These are not fresh breakouts, and this is not new leadership. Semiconductors showed leadership there in February when the stocks broke above the November high there and above the 200-day moving average. Now the 200-day is still pretty flat. We had a little bit of a flag and a flag breakout, a little bit of a wedge, and we got a wedge breakout over the last 2 days. Now the equal weight semiconductor SPDR, which is XSD, that gives you an idea of how the average semiconductor stock is performing. And we can see here that it is performing just fine because as well we have a breakout and we're holding that zone there with a couple of pullbacks, with the support there in that 74, 76 area and a nice gap surge on Monday. Now looking within the group, look at Microchip Technology getting a flag breakout. It's a bit long for a flag, I will admit, but you had this big surge. You have the pullback to the 200-day, and you can see broken resistance turning into support there. And look at that gap and surge off the 200-day. So yeah, it's 10% above the 200-day, but that's the first level to watch for a failure here. We look at Applied Materials. This is another one. It got a breakout in March and then fell back and ultimately held that breakout zone, kind of battled that 200-day. So there was the first breakout and then a little pullback, and now we're surging again. So again, watch that 200-day at 39. A close below that level would be the first sign of trouble. And there you can see RSI holding that 40 to 50 zone. When we look at Lam Research, a similar pattern here with the breakout there in January and moving higher into February, pullback in March, surge, a little bit of a flag wedge, and on the verge of breaking out of that. And then the one that I think is the strongest of the group here is Teradyne, because it has a nice breakout there in January and February. It pulled back pretty sharply, but broke out there, stalled, and look at the breakout there. Pretty clean breakout in Teradyne, and there is RSI holding that 40 to 50 zone. All right, now for some stocks to watch. We've got Cognizant Technology Solutions breaking above the 200-day. And like most stocks, it had that big surge there in January and February, and then pull back into March, but we got a nice break above the 200-day and a bounce off that RSI 40 to 50 zone there. So that's a bullish breakout in the works. Next up is Fabrinet, and this one has what I call a creeping uptrend here. It's kind of sneaky because, you know, you've gone from, say, 30 to 60, you've doubled, but if you look along the way, you had a consolidation and then a breakout, and then a really long consolidation and a breakout, another consolidation and a breakout, another consolidation, and then a move higher. So you can see this stock spends a lot of time consolidating. And right now it's in pullback mode with this wedge, but you can see RSI's in that 40 to 50 zone, so that should be support. And I would watch for a breakout here and continuation higher. Next up is FNSR, and this is in the networking group, and you can see a 52-week high there in late February, a pullback into March with a falling wedge, and then a nice big 2.42% move today to break out of that wedge, and RSI holding that 40 to 50 zone and moving back above 50 there. Next up is Google and, well, Alphabet if you want to call it. I'm still calling it Google. But you had the higher high, a little consolidation, a breakout, a pretty hard throwback, but we're bouncing again. So Google's above its rising 200-day moving average. So I think the cup is half full for Google. All right, next up is Square, and Square is really interesting because it's part of the electronic payments group, and you know it was a big leader back there in 2018 with that surge to new highs. Had a big correction, big moves get big corrections, and you broke out of that wedge, you broke back above the 200-day, and even with that correction, you still have a rising 200-day moving average. And what I like here is you can see that we have consolidated here, and we're at that 200-day, and if we get a little break out of that triangle, that is going to be bullish. You can see RSI is holding that 40 to 50 zone and looks like it is turning up as well. All right, so that concludes this edition of On Trend. Thanks very much for tuning in, and remember to stay on the right side of the trend.